Hey everyone, John Hunter here, and today in the market psychology video, we're going to be taking a look at what I would consider a morning pullback that turned into a breakout type day. So crude oil, we opened up yesterday with a decent gap higher, right into a resistance area at 40.59. Now that area at 40.59, that is a monthly level of support and resistance, so you don't really want to play around with that. We open a little bit above it, but then they hammer lower. So we know that sellers have initial interest, at least at the very open, and they're considering that this is probably pretty good pricing to become a seller. Now, the one big issue here, the sellers tried getting the move lower. They were obviously very convicted to the downside right as soon as the market opened. But then they can't even follow it through. They get a bull candle that goes in the opposite direction. Now, it is a very weak bull candle, so it's not going to entice a lot of buyers in. But at the same time, it's also, probably not going to entice a lot of sellers in either. So we get kind of stuck in this small little range. Then we form another one of those candles. Now, because this is back-to-back, there were probably a decent amount of sellers that were waiting under that candle, just waiting to see, hey, if you hit that, I'm selling it and we're going farther down, maybe just to the moving average, but they never triggered either. So we're getting back-to-back where sellers, aside from the ones who sold the open, they're not getting any opportunity to get back into this market. And then we get an explosive bull candle back up through the highs. Now, we have to understand that the sellers are obviously very convicted to the downside, and if anything, they're not going to allow this market to go much farther back than the size of this originating candle. And that's about all it gave you. So if you are going to be buying into it, that's what you're looking for before you start turning around in the opposite direction. Now, just like we always say, you don't want to be the first one to the party. So when you're selling up here after this buy took place, you don't want to sell this one here because, yeah, okay, you hit that one-to-one area, but is that enough to really sell after seeing a decent amount of bullish conviction? Probably not. It's safer to sit on the sidelines and wait. We get another follow-up entry after, but again, it's a really weak bear candle, and it may be a little bit early. I could see why you would sell this big candle right here, which is why I marked it with a blue dot, just given that the buyers are giving up. This candle is definitely large enough to take back that morning move, and we already know that the sellers are interested in selling anywhere around here, and if it came back to their break-even point, they still closed underneath that. So we know that sellers are still heavily convinced to the downside, and now that they have a close back underneath their break-even point, i.e. entering right at the open, we shouldn't see the market want to go back above that. So that becomes a big line in the sand right here because we know that the sellers do not want to see that broken. The buyers try to break it, they fail, and they close back underneath. The sellers then come in after seeing it push above that last bull candle and immediately swat it right back down. That's a very big clue to become a seller to drive this market farther. This was actually the trade of the day video. If you haven't seen it, make sure to watch that. That was uploaded prior to this one, but just a beautiful drive lower that came afterward. Now, we hit the gap area, we filled that gap area right through here, and you can see there was a lot of profit taking that took place right there. In fact, we were one of them. In the trade of the day video, that's exactly where we were looking to take profit. So we're definitely not the only ones that wanted to do it. But then we get this weak bouncing here, and look at, the bulls just aren't able to accomplish anything. That's not going to be very good conviction for the buyers. And any buyers who are maybe trying to get in just the fact, oh, well, it's a gap, I'm just going to buy it. They're not going to be too happy about seeing all of this weak bull candle movement, and they're likely going to exit underneath it. And that allows us to sell right back down to get all of the stubborn buyers. Their buyers, the stops are going to be underneath the low, and that is our major objective to hit. And that's exactly what the very next candle did. Drop that thing lower and slammed through the bottom. Beautiful breakout movement. Gorgeous stop run movement all the way back down, and look at this follow through. Just a beautiful move to the downside. So that is what really this all boils down to. We started with a potential pullback day, but we know that the sellers own the market and they're very interested. And that opening price became a very important level through the day, knowing that the sellers were so convicted there, they don't want to see it break. And it didn't. And that's what gave us the clue that you could have caught this entire move down. So just a gorgeous combination of technical analysis along with market psychology, knowing what's going on behind the scenes. And you were able to have one heck of a trading day today. So hopefully you learned something. Hopefully you found it interesting. And we'll see you next time.